Simon with toughtrader.com. Wanted to do a preview for this week's coming price action, specifically Asia session, European, and into Monday night. And I want to start off with the building blocks of what to expect going into Asia, coming into tomorrow, what the markets usually look like. So the first thing that you'll see, we're going to do this entire preview based off the TPO and volume profiles. I don't have the volume. I take it back. I do have the volume profile. So first, let's go take a quick look at Friday. And what you will see, what stands out about Friday's chart. So there's a couple of things. First of all, when I'm looking at the profile, have we broken out from a major area? We have. You'll notice when I'm looking at the chart, look where all these closes, for the most part, were all centered right here, right? Every close that we had underneath that midpoint, right, from a closing standpoint, right, the majority of the closes over the last couple of weeks have been between 27.29 and 27.21. That's important information. So 27.29 to 27.21 tells me that in order to be really bearish, right, I need to close below there, right? And then the next thing I need for it to hold below there. And then that's confirmed by more than just the closes. If we'll continue looking, what we'll see is each time we really, with an inability to trade and hold below 27.21, we snap back. When we got below 27.21, it became resistance, support, resistance, right? So you can see how the day, I want to show you how that day played out. See how we pushed right up, rejected right in front, and closed into it? The following day, look how that worked, right? They tried to gap up and break away, swept through there, closed below. This was the July 4th holiday. We traded right up to 27.21. And then on July 5th, we traded through, below, above, and then finally we had one last back test before finally, out of these series of days, this close on the 5th turned out to be the highest close. And then we pushed in Europe, and then we drove up and obviously had a trend day up, and we spent the majority of the time on the upper end of the profile on Friday. Okay, so why does that matter? So the first thing that tells me is we put in a good base. The second thing that tells me is over these period of days, 1, 2, 3, 4, 5, 6, 7, 8, 9, that out of those 1, 2, 3, 4, 5, 6, 7, 8, 9, out of 9 days, right, they made 1, 2, 3, 4, 5, 6, 7, 8 attempts, 9 attempts on all 9 days to get below and hold below 27.21 and unable to do so. So in your notes going forward, you want to write down, hey, holding below 27.21 is important. Failure to do so probably leads to a push to the upside. That's really good information for starting off and if I was explaining this to my daughter, Mia, that's exactly what I'd be explaining to her. I'd be going, my love, if you can't get below 27.21 you really don't have a lot of downside because you keep finding, by hook or by crook, they keep finding a way to responsive buy. And once they push above and close above or hold above for any protracted period of time, they tend to push out and up towards 27.40, 27.50, right, which is that primary resistance and higher. So the next thing that we know from the last 9 days is that the market had a really hard time getting above and holding above 27.4275. Again, we can see that specifically acted as resistance on 1, 2, 3 days, right? And we kind of consolidated, and you can see that we kind of got, so I love drawing pictures on my charts. You can see that we were forming this wedge right here where we were getting higher lows and lower highs, and we finally broke out on energy. So, and then we had a P profile. So the first thing that I ask when I see that is I want to go and I want to change so I'm purely a day trader and I'm a leveraged day trader, right? I don't care about how many trades I get. I just want to make sure that the trades I do get have a very high odds of being very profitable, and even better, that they might be able to stretch in a significant direction one way or the other. So the first thing you would say out of this, because everybody has the same information, right? We're all going to look at these 3 points right here and say, hey, this should act as an area of responsive buying. So the first thing I would look at in Asia tonight, or if we have a down day, say maybe due to the Korean information or whatever floats the market's boat, right? If they find a way to push down towards 27.48 to 27.4275, I'm going to guess that there's going to be responsive buyers there. It doesn't take a rocket scientist for everyone to look at that chart, and whether you're a swing trader or if you're a day trader or you're a position trader, you're going to look at that wedge, you're going to look at that break, and everyone's going to draw this pattern. We stretch that out. Everyone's going to come in, and they're going to go breakout, backside test, continuation. That would be technical analysis 101, right? So that's why the 2742 to 2748.75, that is an important area on the chart. The next reason why that 2742.75 to 2448.75 is important is because that is where, in this particular profile, from a TPO standpoint, so I have two profiles here. The one on the right is a volume profile. The one on the left is a TPO profile. This profile is based purely by, the volume profile is based purely by volume by price. Time has no consideration. The profile on the left is simply a representation of trade price by time, and volume has no consideration on that profile. So I use both of them to get a good picture. What the profile on the left tells me is that there was very little volume that was put in between 2733 all the way up to 2757. There was very little volume, but there were periods within there that we put in an okay amount of time, and this is only during the US trading session, right? So why is that important? When we complete a profile, so a great example of that would be on the 28th. See how on the 28th, when we opened, if I spread this out, I don't want to do that right now and scoot it over. Okay. See, this profile opened right here. So this is, if for those who are joining me, if you're looking for a quick solution and easy trading, I don't do that. I'm a serious day trader, and I'm about understanding what the market's trying to do so I can spot where my home runs come from. So there's not going to be an aha moment. There's going to be a if then, this is what I'm looking for in these areas throughout that. And I don't think trading is easy, and I don't think it's a quick buck. I don't think it's hard. I just don't think it's easy. So see how we came, see if you adjust this to this, this was the last anomaly in this profile that needed to be repaired. You could also say there was a low volume node in that profile right at the bottom, and it was at the bottom of that distribution area from the profile. But I look primarily at the TPO because I think it's easier to read. Once we traded underneath, so this is a large profile. When the profiles are small, I look for an over-under. But if I waited for an over-under in this particular case, even though it worked, it consumes the whole area. So I make an adjustment in the way I look at it, and I just go to the bottom of the profile. So see how we just traded underneath that profile, right? So once we trade underneath and back above, these are 30-minute bars, I consider this chart repaired. Okay, so the correlation, and then you'll see what the net result was. See how we traded to the bottom of that profile? We had a, so notice how this went. We put in this day, we had a P profile, we gapped all the way down to the bottom of this, to the bottom of where this chart needed to be repaired, right? And then what you'll notice is we came right up to this anomaly right on top, right? You'll see we did the over-under. We pushed all the way back. When the market pushed back, because it completed this area and it completed this area. I want to explain the importance of why that's a big deal, okay? These were the two major areas that needed to be repaired on the 28th. So once we gapped down and traded underneath that 2701, the market turned around and said, hey, what needs to be fixed next? And it said this hole and the hole that's right here on the left, this hole right here, and then this anomaly right here. And you'll see we did the exact same pattern. See how we just traded above, underneath, and then long liquidated. And when the market came back to the long liquidation, you know, what you have to ask as a trader is, what does the market want to fix? Like if we pull this in, right? Notice that was a swing low down there. See that? The next thing to fix was a long way away, and the market didn't have the energy to push down there, right? By the same token, when the market gets over here, right, it says, what's the next thing to fix in this profile? And the answer to that question is this hole in the, so I'm going to clear this off again so you can see back to what we're doing tomorrow and how we're going to figure out how to make a lot of money trading, right? So when we fix this hole, we fix this anomaly, right? And then the market's going to look and go, so see, this anomaly doesn't need to get fixed because it was fixed over here. See that? It already got repaired. So we fix this, right? And that's how I look at it. I go, what needs to be fixed? Because I want to think like the market as a whole, as the auction process wants to think. And so then the market comes back and it goes, okay, so which way is going to be easier to fix which piece next? And so remember, there's a couple of things you have to remember about trading the S&P 500. Number one, net flows are into the market to the positive side, and most strategies, investment strategies where the huge dollars are, where the trillions of dollars are, have a mandate that they stay net long. So there's always some type of bid, which why it makes it so difficult to be short the S&P 500. It's really a challenge. A lot of people have gotten wiped out trying to short it, right? So when the market gets over here and we start consolidating, we go, okay, the next thing to fix here is not even in sight, right? When I look at this chart, see how underneath the next thing to be fixed is all the way down here at 2668. That's what stands out. The chart's doing the work for me, so I don't have to go back to the left. That's the next thing to be fixed. We've tested this 2692, and then the market's looking and it's going, hey, you know what needs to be fixed next? Is first this that's going to go. So this anomaly got fixed, but then it created another anomaly here, a hole in the profile, then this TPO. Now look, right, in order to understand what the market's going to do, so that you can tell once you're in the trade and you can go, so this is how good traders go, what's the market likely to do next, right? And it does it, the important thing to remember is it does it in step-by-step stages sometimes, and sometimes it just obliterates everything and goes to the most needed repaired area. So what you will look on this day, on the second, what the market did was, and I'm going to go through this one last time so everyone gets it. It's exactly what I do with my daughter when I'm teaching her how to trade. Fixed, right? Fixed. The next thing is this weak area that every retail trader gets sucked into, which is the gap fill, and it sometimes works and it sometimes doesn't on the settle price. And so when you look at this and you go, okay, we fixed all of it. When we're back over here and we look at it, we go, hey, we fixed everything over here. What needs to be fixed and what's the easiest way for us to push? Well, what stands out to me here is I go, hey, well, this hole needs to be repaired, right? And then this anomaly all the way up here needs to get fixed. And then watch what the market does. So we open up, we fixed everything, we're sitting around, and then all the traders go, hey, we need to fix this hole. And it drives straight up into the top of that hole. If we draw a line over it, you'll see it. Now it comes right to the top of that hole, and then it pushes back and it goes, we've now fixed the hole in the profile, right? And then we get to the next day. So everyone's looking at this chart and they go, oh, it was trend day up. It must go up the next day, right? So this is not me predicting what the market's doing. I'm simply explaining what the market actually does in response to what the magnets were on what it was looking like to repair the chart, right? So when you look at this the next day, we opened up, we tag into the anomaly, and then the market said, right, so we had two choices. We either needed to consolidate above here, which we did not, right? And then the market asked a very simple question. What needs to be, because this is going to apply directly to how we're figuring out tomorrow. So then the market goes, okay, we fixed this anomaly, and we look above and we go, there's really not anything to fix above that anomaly. It kind of got exhausted there, right? There was no reason to continue. It had to decide whether it was going to go to 2752 or if it was going to come back to fix the holes in the profile. What needed to be fixed? That's easy to tell. Holes and anomalies want to get fixed. That's what the market likes to do. And the market's usually good for 20 to 25 points of stretch max, with exceptional days being 30 to 35 days. On down days, we can stretch to 50. But that's not the majority. The majority, if you did statistically look at it, almost 95% of trade days are going to fall in that 0 to 25 point downside range before finding responsive buyers, right? So, and again, this is my preparation. These are the same notes. So this is the same preparation I'm doing. Is I'm going back, and because I don't want to walk in with my own bias on the day, I want to ask as a trader the same question the market wants to ask, which is what needs to get fixed. So the market comes back and look what it did. So if we look at the market here, we say, okay, we fixed this anomaly, check. What are we going to do next, guys? Okay, let's come back and fix this anomaly. Okay, so look at where that low was, right here. We came into the top of that anomaly and we found responsive buyers. Well, I can tell that this was the low of this bar, and then it bounced back up. The market said, you know what? There's still nothing to fix up above. Maybe we'll fix the hole, okay? So we come in and we sweep through the hole. The hole's now fixed. Check, no response out of fixing the hole, by the way, okay? Fixes the hole, right? And then, so see how these anomalies, how it's coming down? You have this one, and this one, and then this, what I would say repairs the chart. That repairs the chart, that 2707 and a quarter, right? Now, look at the stretch that it took to get there. In order to get to 2707 from 2740, which is the high, it means you're going to need a 33-point stretch, right? Notice that we go from 2740 to 2720, right? We tack on another 10, 2730, and it just doesn't have the energy to get into the 2710.50 or into the 2708 because we've stretched too far intraday. And that's important for you to remember because you can go, because what you don't want to get caught saying is, but the chart has to be repaired down here. You have to remember it's a combination of two things. You can need to make a trip from New York to San Francisco, and you can be in whatever, Mississippi for whatever reason, right? And you can go, we're pulling over for gas here, and then someone, your passenger goes, but we're not in San Francisco yet. And you're going to say, yeah, but there's not enough gas and or energy to complete the trip. We have to stop and build more energy, right? And if you look to the left, right, what did the market do from there? So if you recall from this day overnight where we had, this is the July 4th night, I'm not sure what the Asian session looked like, but I'm pretty sure we pushed down on one of these 2 days, we pushed down into this 2712, 2708, and we never got back to repairing it. So I would be hunting these repairs, but it doesn't mean you're going to get the repair done. And then once this day is created, right, watch how it does. See how this is the last area to be repaired on the following day on the 3rd. See how we get right to it, we repair it, and the market kind of goes, let's go back and fix some of this stuff underneath because there's nothing close by to fix. So finally, when we look at this date here, see how we fixed all this and all that's left on the upside, right? See all this? There's two ways this could have gone. We either had to get underneath this anomaly to come down and fix what was below, which was really this 2724, and then we had a poor low. See when the lows aren't stair-stepped off the bottom, they tend to want to get repaired if we can make it in that direction, right? So we couldn't get underneath the point of control Friday, and we drove up, and what we ended up with is a massive short covering profile. That's about as P a profile as you get in the markets. So then the logical question comes, what do we tend to get when we get a P profile, right? And so I have a couple of examples where I can actually show you that. So I want to know what's going to happen here. So the first thing I want to be aware of is number one that's on my chart. If we can make it to 2742.75, to 2747.50, that 5-point range right in there. The first thing that's in my notes and very important to me is if we trade underneath 42.75 and then we trade above 47.50, any backside push or consolidation in here where I'm then switching to my algos and my order flow read, I know that I want to try to establish a position, and whether this is the result of a gap down in the morning or we trade down through the session, I know in this area I have the potential for a home run trade that could push me all the way back to 2762.50. That trade hypothetically could be worth 20 points to me, right? So I'm willing. So to my traders who are in the room, like Daniel and Peter, who are my swing guys, I'm trying to think, Bill, who else swings in the room? Greg, right? This is so this gets highlighted, right? Automatically, this becomes really important. And why does it become really important? Because when I complete or push down into the last anomaly in a profile, I know that I have the potential from swinging from the bottom of that anomaly all the way back to the top of that area. So that comes where I want to draw that bat back and get ready to swing and pop that ball way up in the air. That's where I can get my home runs from. What this looks like once we're in here is a totally different video, but this becomes very, very important to me. Okay, number two thing, right? I know that if I for some reason, so we had North Korean news over the weekend. I don't even know if North Korea matters anymore. It doesn't matter to me from a trading standpoint, right? So the next thing that I see in this profile that I know from here, see how you have this little island right here in the middle? See how they had this little, we had a P profile here, we had a little island right here in the middle. If we break down the fifth, because you want to throw out the fourth, it was a half day. See how we simply trade right through that little anomaly that's in the middle? So normally, this is conflicting information. Anomalies in the middle of the profile. This is a weak anomaly, and I would expect it to get broken, right, guys? So y'all can just, for guys in the room, I'm going to post this up in the room, obviously, and it'll require less time, right? So while I would expect this to hold an Asia trade, I would be very leery, right? Just like we broke through over here on the third, and I'm going to go show you a few other examples of when we get that hole in that profile, the middle profile gets busted. So let's go find it. Okay, so see how this is the last anomaly right here, and ultimately this middle profile, this middle anomaly goes, right? And then I'm going to do one more. We go back to the left. See how this big anomaly, end anomaly, see how the little anomaly in the middle gets blown up, right? So that tells me statistically, even if it's just recent, but I know it's longer than just recent, that I want to be very leery. This is not a place I want to spend a lot of, while I may want to scalp in this location, this is not where I'm pouring a lot of energy into getting my size to work, right? Because, why? That middle anomaly tends to get blown up a lot. And so when there's multiple anomalies all the way through that profile, I want to skip the middle ones and look for the big ones on the end. And as you can see, again, this would have been a big anomaly. And what am I looking for when I get there? So notice this anomaly actually held the first time. See how it actually held because of the rotation size? It held, but ultimately gave it up. Then we get underneath this big anomaly, and we actually repaired this little hole that's right behind her. That's another detail. Oh, we never got to it. That would have been the most ideal, is to overshoot this anomaly, hit this hole, get back above, and then take off. But either way, the point is this middle anomaly is dangerous. So we can go back and go, okay, this may or may not hold, but I can't hold on it as strongly. And more importantly to remember there, right, is if I do shoot past this, that if we shoot to the downside, I also would expect this, while to cause rotations there, I would expect us to get back through it and come back to that 27.67. The next thing that's important to remember about that 47 to 42.75 and building my argument for why I want to be or attempt to swing long, as long as we don't gap through it, right? If we gap through it, I want to make sure that we get back above and then start working the trade, right? Is that it's the top of the prior balance area, and they tend to hold. So I've got the final anomaly, right? I have potential for over under in that 47.50, 42.75. I have a potential upside breakout after 9 days of consolidation, and I have the top of that consolidation, which would offer me a potential shakeout area and a push back up. So for me, the most important part on this chart right now is 27.47.50 to 22.42.75. Additionally, if we get underneath 42.75, let's say we cratered for some reason and we got to 28, I would now expect the first push into that 42.75 to 47.50 to provide a tradable counter rotation to the downside. Why? Because we would be trapped back in range, and the most logical target if you trap back into range is the bottom of the range, which puts you all the way back to 2710 to 2700, which is currently the bottom of this trading range, right? So we know now, looking at that P profile. The next thing that's of interest, right? The next thing that's of interest in this profile is, well, what kind of price action can I expect after a trend day up? And that I can answer much more easily, right? So if we go back and look at the history of markets, and we don't have to go very far. Let me fix this really quick. There we go. So I don't get too excited, right? I'm going to go back and look and go, well, hey, what happens after I get a trend day up that breaks out? So I can, the first one I see that's really easy to spot is I look at 6.6. See how, while this wasn't a short covering profile, we did open up within the prior day's range, we trended up and we closed at the high. Look at the following day. We can tell some things really quick from looking at this profile. Number one, it turned out to be a balanced day. Number two, it jumped the middle anomaly, right, and skipped to the larger anomaly below. So we've already highlighted that. We know we have an edge. We don't want to lean on that middle anomaly tomorrow, right? Number three, right, Once we got into this big anomaly, it responded. And what was the range from high to low? We can get a pretty good idea about that as well. 27.84. The low came in at 27.63. Notice that's 20 points, even in a trend up environment. So the first thing I want to do is have my baseball cap on. Down 15 to 20. I want to look to get long. Notice, right? Notice how the market worked. We came down, and what this market did on this particular day. We opened up, came into the top of this anomaly and into this little hole, responded up, came underneath the anomaly into the second hole, responded up, finally swept that anomaly into the big anomaly, right, which was the volume point of control and the TPO point of control for the day. Excuse me, TPO point of control for the day on a 20-point stretch. We had a poor low there, actually, but it responded, it pushed. We stopped one time into the downside right here. Guys in the room, y'all know what I'm talking about. This is the 50-60 back. That's the continuation back up. From this anomaly, if you knew to skip the middle anomaly and look for the lower anomalies, you were able to arrange a long from 27.63 to 27.78. Let's call it 27.77, right? That's over a 14-point rotation. Notice, in order to get that, A, you didn't have to short the open. You didn't have to guess whether it was going to be a second drive up or second drive down. B, the next thing you will notice is as we roll from 27.84 and we look at 27.74, 10 points down, you'll notice that we did get a response a little bit behind it, but once we're 10 down, we get a response back up. Once we're 20 down into a key location, we get another 14, 15-point response back up. Okay, next, I'm going to go over one more time. Look again at the 5:30. It turned out to be a trend day up. See how we opened at the low and we trended up. What did it do the next day? This is, again, I'm hammering this primarily for the guys in my room because I want them to understand that just because if you had looked at this date right here, what you would have seen on Twitter and on StockTwits is, oh, that's an uber bullish day. We closed at the top of the range. Tomorrow should be a gap and go. We should go straight up from here. I nailed the low long, and I held long all day long, and I'm long and strong. That's what you see. And then all those voices disappear the following day because we closed at the low. But ultimately, what you will see right up until the end of the day is that the primary characteristic that this market had, right, is if you look where we opened, and I'm going to go back to the other day right here, close it up. We opened up in the middle anomaly. Notice how it keeps trading through it. Notice next, here's the bottom anomaly. This chart is repaired once we trade below and above. This date, the 5:30, gets repaired. It's really important to know that, guys. You have to have in your mind. Notice I'm highlighting that 42, the bottom of whatever, I think it's 42 area as the chart's repaired. If you're wondering how it is that I can swing large positions intraday and I end up pulling out 10, 11, 12 points out of those trades, both up and down, I keep asking the same question. Is the market presenting me with a potential opportunity to repair a prior day's chart, right? In which case, even though I don't know the path that the market will follow, meaning the rotation size is up and down, that ultimately, once that chart is repaired, the reason why I'm looking at options here, the reason I'm looking to position myself intraday in futures is because I know I have a very good chance of traveling right back over here, right? So if we look at that intraday, the middle anomaly acts as support. I'm sure there was a scalp there, but ultimately gets traded through. The bottom anomaly, notice that they don't do the over-under. They just push in, push all the way up. What do? We come into the top anomaly, reject down. We finally travel all the way back down, right? Complete the over-under right here. We do the 50-60 back after the auction's complete, and then overnight we launched. If you bought the calls, did really nicely. Most of the guys in my room don't hold the futures overnight, right? And it looked, everyone who gets emotional about the market, who all thought we were going straight up here, were like, oh my God, it's going straight down from here. And there's just not a correlation between the two in the S&P, right? Conversely, I want to show you one more day going back, right? So if you'll look when we had a trend day up, so here's another day where that didn't close at the high. Let's find one where we close at the high. So here's a day where it looks like we gapped up, right? We didn't quite have, we actually had a double distribution, but notice this, so I want to cover this. In case we gap up tomorrow, right? The first way you'll know that the day is short. So guys in the room, I want you to write this down. It's really, really important. okay? If we don't get into and trade into the prior day's profile, meaning we have to trade below prior day's high, be very, very cautious shorting above prior day's high. The easiest rule to keep you safe from getting annihilated on a second trend day up, because usually, so remember, usually they're balanced days, but not all of them are balanced days. And so how do you protect yourself? You go in and go, are we trading above prior day's high, right? So if you look on the 10th, we traded above prior day's high. If you look in the first hour, see how we consolidated above value. Our trading rules say if we consolidate above value, expect it to push out. I will be hunting this profile tomorrow. If it's not a balanced day, this is my plan B, which is gap up and or drive up and consolidate in the first hour. Each of these bars are 30 minutes. If we consolidate in the first hour by hook or crook, I'm looking for a way to get long, just like on 510, because I would expect a push to the upside, right? And just so you don't get too bearish at the top, notice that second day, the low of that day is 2706. The high of that day is 2730. That is a 24-point rotation up, and then it gets exhausted and waits. And then the next day is a balanced day, as you can see. And then the third day is a balanced day. And then the fourth day is a balanced day. So the majority of days in the S&P are some type of balanced day. You just have to calculate what the range is going to be and what it's trying to get fixed, right? And then the next part that you're asking, and I think the most important question that you should be asking is, when is the chart repaired? Because that's where the major reversals come from. So for tomorrow and for tonight in Asia. What I am looking for in Asia, and of course I'm using the algo to help me finalize my decisions for entries and exits, right? And so for tomorrow, the first question I have, are we opening above or below 2761 to 2764? If we open above 2764 and a quarter to 2061 and 3/4, I will look in Asia for that to tap me in for the long. Now, I'm going to be acutely aware that this 2753 to 2750, while it may hold in Asia, and it may provide a tradable rotation in the US session, I expect this middle anomaly to break, right? And then finally, see how this is the last anomaly right here in this C period right here? I am on the hunt from 2745 to 2743. You could possibly stretch that down to 2742.50, but specifically, if I trade below 43.75 and back above 43.75, I am looking for ways and excuses via the anomaly or via 50-60 retraces and or both, and my momentum indicator to get long, and I'm looking for a push all the way back to 2762 from 2742. That's a 20-point rotation, and that's what I would expect, right? So this is important. People ask me, why don't you just buy 2742 if you expect it to hold? I want to see it trade below, trade back above, and then start working the trade, because the alternative to that is it starts consolidating underneath, and then the backside test of that becomes an opportunity for it to come back and test 2733, and I'd prefer not to have the loss. You don't have to buy the low to have a really great trade, right? So for tomorrow, those are the prime areas. The obvious target from where we're trading right now are two, without even looking at the profile. I'm going to highlight them for you. There's a volume point of control and a TPO point of control sitting at 2770 to 2775 for ease of conversation. That's this right here. It's naked. That's what wants to get tested. My guess would be we actually test that in Europe and or Asia, right? Depending on whether we gap down or gap up. But my guess would be, based on the strength on Friday, that in Asia they'll try to test, or in Europe they'll try to test that area, right? So I would hope that I get a long signal out of 64 in Asia, and then I would target 71 to 74 on the upside. And if I get that in Asia, i.e. going into midnight towards London Open, that's a home run for me. All good, right? If we drive tomorrow, we have a trend day up. When I look to the left and what needs to be repaired, right? What stands out is this right here, 2774.50. And if 2774.50 gets repaired, I need to push this out and look really carefully at the profile. Just going to do that really quickly. After 2774.50, there is an untested settle price at 27.79 75. I don't trade those open gaps unless the algo sets up for me. So that's a no-go for me. The algo has to set up, but that's not a reason for me to short that area, but that is an open gap. All right. Now this open gap is a go for me because it is a anomaly and there happens to be an open gap sitting there. I would look for rejection from 27.83. Why? We closed at 27.6250. 27.83 puts me up 20 magical points, and the market tends to get exhausted. So it would either be this 27.83 to 27.85 or the naked volume point of control at 27.88, which pitches up the magical 20 to 25 points. Even if we close up there, it's really hard for the market to continue to drive beyond 25 points, right? And the same rule applies below, which makes this 27.62 down to 27.40. Totally plausible to the downside. So those are your extremes on both ends. And then obviously if we get below 27.42, that point of control was almost tested. And this is actually pretty weak. It would actually be pretty bearish, I would say, if we close back below 27.4250. I would look for a trip back to the other end of the range, all the way down to 27.16. And the first thing that has to be repaired there, this is almost tested due to the open. And this was almost tested. It's actually this anomaly right here that needs to get repaired. And I would be looking for long from 27.07 to 27.09. I think there's zero chance. I'd give it a 1 or 2% chance of getting to 27.09 to 27.07 tomorrow, short of some kind of fundamental disaster taking place. The S&P just doesn't have that much energy to get there in a day. So that's what I'm looking for. My favorite areas, since I don't like shorting when the market's going up necessarily, right? But at extremes, 27.88, 27.83 is my prime area to start looking for intraday rejection and possible reversal areas, right? In Asia, 27.64 for 27.73, right? Below 27.64, right? Because it's Asia, I would expect an attempted response out of this 27.53 and possibly even intraday, but I'm not staking any kind of significant claim on this area in terms of trying to swing it out. And then I am trying to build a larger swing position, and I'm going to try to push out of 27.42, 27.45, particularly if we can trade under 42 and then back over 45. I will be looking to push on any backside test for a push back to 53, followed by a push to 64. And that is my trade plan for tomorrow. I can't get any clearer than that. I will just simply let the algorithm, for those who are new to the room, I use an algo to key me in when the market's about to turn. And then the other thing I want to stress for the room, every short I took last week was a loser. There wasn't very many of them, but every single one of them was a loser. Every long but one was profitable. Think about, guys, which side of the trade you want to be on. The market's working better to the long side right now. My suggestion would be intraday during the RTH, look for opportunities to find exhausted sellers, push us to the upside at key locations, and let the algo trigger you in. It's doing a great job on the long side. The short side trades that are setting up appropriately, meaning we're following process, are having a lower win rate right now. And the way I would attack that is either by lowering your trade size or skipping and waiting for the proper longs to set up. And if you do that, you should make plenty of money. That's what my P&L reflects. That's what the P&L, the one-on-one clients that I'm coaching reflects. And I will be picking up more and more Asia trading going forward. As a matter of fact, I'm changing my schedule. I'll be around less in the afternoon, so I can go home and help out with the family and spend a little time with the kiddos. And then I'll be back between 6:45 and 7:30 to set up my Asia trades and hopefully be able to push some of those into London Open. Even if I can't be there, just kind of set it and forget it, stops or pushes up. So anyways, that's my 2 cents. If you have any questions, if you'd like to come try out the room, send me an email, tradertough@gmail.com, and I'll be happy to extend a 5-day pass. I think the value, it's $200 a month, and you should be able to make more than enough money to cover that cost and boom bust cycles and bad trading cycles. So that's what this is all about. Anyways, have a great day, guys. I hope this helped. And if you liked it, please hit the like button. Oh, one last thing. I always forget this. I'm going to throw it in. Past performance is not indicative of future results. I'm sharing my trade plan with y'all to make it in hopes it'll make you a better trader, right? But don't follow me blindly. Don't follow anyone blindly. Know what you're doing. All of our risk tolerance levels and what we're trying to accomplish are different out there. And you got to make sure your trade plan is suited to what you can emotionally handle to trade. So, anyways, have a great night, guys. I will talk to y'all later. Or a great day, Sunday afternoon. See you.